Good afternoon, good evening, or good morning, depending on where you're connecting from, but I'm guessing it's probably morning or afternoon since this is one of our SolarWinds webinars really just focused on US-based MSPs. Welcome to SolarWinds webinar here today on COVID-19 related financial resources for US-based MSPs. I'm your host, Colin Knox. I'm the head of community engagement here at SolarWinds MSP, was the former MSP owner and founder of Passportal. A little bit of housekeeping before we kick off. All attendees are on mute today. That's not because we don't want to hear from you. It's because we want to ensure the best possible audio experience for you. In fact, we do want to hear from you today. These webinars are for you, and we're looking to give you the details and content and answers that you're looking for. So if you do have questions, please use the questions panel in the GoToWebinar sidebar, and feel free to ask questions at any time, and we'll be sure to handle as many of those as we can. Please do let us know if you have any audio or video issues, and before anybody asks, yes, this session is being recorded and will be made available to you. Before we go forward, just wanted to do a quick poll here and just check with everybody to see, do you anticipate applying for financial assistance through the CARES Act? We'll give everybody just a minute here to fill out the poll, give us a gauge of who we're talking to. You know, I'm pretty sure there'll be some that just aren't sure yet, want to get the details. Yeah, could get your answer in, and that'll help us understand kind of who we're talking to and help Dave direct some of his content here. So what we're seeing here, Dave, is just about half are yes, 10% are no, and 42 are just not quite sure yet. So moving forward, I'll introduce our speaker for today. We're joined by and very, very proud to be working with Mr. Dave Wilkeson. He's the CEO of MSP Advisor. He's got 25 years of experience working with VARs and MSPs of varying sizes, very small to very large. Personally built an 8-person VAR and transformed that into an 80-person MSP, and has a consulting practice focus on achieving operational excellence. And even more relevant now than ever, lived through the 2008 financial crisis. So welcome, Dave, and thanks for joining us today.
Yeah, thanks, Colin, for having me. And hello, everyone. Yeah, the 2008 financial crisis there's a lot of similarities, but there's also a lot of differences, and it's kind of interesting. We're almost in a combination of the 2008 financial crisis and the 9/11 crisis and the 1908 or 1918 Spanish flu epidemic. So we've got it all kind of wrapped up into one, which is interesting and different times. But we'll definitely work through it and make that all work together. Today we're going to spend some time and really look at a number of things. The CARES Act is the primary thing we're going to talk about, but I also want to talk a little bit about a couple of other laws that have been changed or been created here, I guess, in the past few weeks. So we're going to talk about the Family First COVID-19 Response Act, which we'll call FFCRA. Most people are calling FFCRA for the rest of the presentation. The CARES Act Paycheck Protection Program, or PPP. We're going to talk about the SBA Economic Injury Disaster Loan, or the EIDL. That loan has actually been around for a long time. They use it when there are hurricanes and tornadoes and so forth, but they've expanded it and added some functionality and some streamlining and removed some rules actually under the CARES Act. And then we're also going to talk a little bit about the option to delay your payment of payroll taxes, federal payroll taxes, and self-employment taxes. And then we'll talk about recommendations and things that we think you should be doing. So just a few caveats. You know, I'm not a CPA. I'm not an attorney, so some of these things are speculations, but I've spent pretty much all week, almost nonstop, doing research on this. So I think I've got a pretty good handle on it. And everything is subject to change. And just so you know, I made 7 changes just today from yesterday's presentation. So there's actually been some material changes of the program since yesterday. So this is a very fluid situation, and definitely something that you got to kind of stay on top of, because everybody's kind of building the airplane as it's flying, which is not something the federal government is very good at, in my opinion. This also only applies to U.S.-based companies with 500 employees or less. So all of this that we're talking about applies to only those smaller, relatively smaller companies, which is going to cover the majority of the MSPs and IT service providers in the country. So let's start with the FFCRA. So there are requirements and benefits under this program. The requirements are you are required to offer up to 80 hours of paid sick leave at 100% pay for all employees that are quarantined or experiencing COVID symptoms and seeking a medical diagnosis. So that's really important. Note that it doesn't say just because they are afraid of getting it and not working. They have to be seeking a medical diagnosis. Also, you have to provide 80 hours of paid sick leave at 2/3 pay for all employees who are unable to work because they're caring for someone in quarantine, or they're caring for a child whose school is closed or a substantially similar condition. And if it's for the purpose of caring for a child, those benefits extend up to 10 weeks. And so those are the requirements. There is a way that you can apply for an exemption if you're 50 employees or less, but they're really frowning upon that. So on the benefits side, though, you get a paid sick leave credit at the employee's regular rate of pay up to $511 per day, or $5,110 in total for up to 10 days of time off. And that doesn't have to be consecutive. So it can be, if they're off for 4 or 5 days and then they're back for a few days and then they are back off. It doesn't have to be back to back. And then in the case of someone that's out because of they're caring for someone else or for a child, you get $200 per day, up to $2,000 total for up to 10 days off for someone who's caring for someone in quarantine. And then it goes up to $10,000 in total if they are just caring for a child. And also on top of this $200 per day, you get to claim their health insurance. So they want you to continue your health insurance, or the employee's health insurance, during this time. And those credits are taken right off of the federal payroll tax liability. So the 941 taxes that you're paying, you wouldn't pay those. So that's how those credits work.
We've had a question come in. You might be covering this a bit later, but what documentation is required by the employee or the employer for these kind of tax credits?
Well, for this particular one, it's kind of up in the air. I haven't seen, what I've seen is that the payroll companies are telling everyone that they are coming up with a system, basically. This law, this FFCRA law, went into effect as of the 1st of April. So it's now in effect, but they haven't really given how they're going to force you to document it. I know that you can just essentially, at this point, just subtract it from those reported 941 taxes. So, for example, I personally use QuickBooks Online, and we got a notice that they were putting something in there so that you could report how many hours of sick leave that you're including in that 941 reporting. So it's somehow going to be cooked into the 941 reporting, I think.
Okay, sounds good. Thank you.
Mm-hmm. So on to what's the big thing in this presentation, and that's the Paycheck Protection Program. It's also called the SBA 7A loan. So just an overview, it's equal to 2.5 times the average monthly payroll costs, or $10 million, whichever is less, and any single employee's cost cannot exceed $100,000 per year. And you'll see me put this quote around payroll costs throughout here. That's because you'll see that payroll cost may not be what you're used to thinking of as payroll cost. It's actually quite a bit of other things, and I've got a list here on another slide that we'll go through. It also includes owner's income up to $100,000 per year. There is no collateral, no creditworthiness measure at all, and no personal signature required at all, which is highly unusual, as we all can imagine. They can be used to pay payroll costs, interest, rent, and certain utility payments. The payments are deferred for 6 months and no more than 12 months, which means that you are not going to have to even make a payment on this for at least 6 months after the date of inception of the loan. And there is no prepayment penalty. So you can pay this off at any time and there's no penalty. This is one of the probably biggest material changes that happened this morning. There's a fixed interest rate of 1% with a 2-year maturity. Yesterday, they had reported it was 0.5%. They upped it to 1%, but this is the current rate that they're saying they're going to give these loans out. And all the standard fees are waived. Now, I've heard rumors that banks some lenders are charging fees. Now, from what I've been able to gather, those fees are supposed to go to the government, and it's not supposed to be passed along to the small businesses. However, this is something you should be asking of your lender: is there any fees? Are they going to charge you any fees? But at this point, I don't have any confirmation that they should or can or anything along those lines, but just kind of a heads up there. And some portion of the loan, as we all know, up to the total amount can be forgiven tax-free, and we'll go through how that calculation works. Now, to be eligible, number one here is the big thing. You have to make a good faith certification that the uncertainty of the current economic conditions makes the loan necessary to support the ongoing operations of your company. That is the number one eligible thing that makes you eligible for this loan. There's a few other things, like you had to be in business, in February, which isn't very long ago, and some other things that are pretty basic. You also have to promise that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. You can't have a pending loan for the same purpose or duplicative amounts applied for or received. So you'll hear that a lot. There is no double dipping for all of these monies. So that means that you can apply and get multiple loans, but you can't use it for to pay the same set of expenses. And hopefully this will become more clear as we go through this, and then we also talk about the EIDL and how this kind of all fits together and why this is an important statement. And you also have to certify that during the period of February 15, 2020 through December 31st, 2020, you have not received amounts under the PPP for the same purpose or duplicative amount. So again, this is this idea of double dipping, because you may, as we'll talk about, get money under EIDL, but you can't use it for to pay the same set of expenses, especially where it comes into getting forgiveness under the PPP loan or the grant under the EIDL loan. So this is probably the biggest question. What are these payroll costs? So they are the wages, commissions, salaries, or other similar compensation to any employee or independent contractor. And that includes owners and many 1099 employees. So the 1099 employees, so if an employee could otherwise be an employee of the company, but instead is on a 1099, those are the people that would qualify under this calculation. And remember, the odd thing about this is normally we would never want to admit that a 1099 employee should or could be an employee. So that's kind of a big tax no-no. So that is the actual wording, though, in the CARES Act says it like that. So I guess they're kind of admitting that there are situations where 1099 employees could otherwise be an employee. Payment or cash tips are equivalent. Payment of vacation, parental, family, medical, or sick leave. So here is one of the areas that could be duplicated with the FFCRA. This can be used to pay for sick leave. Allowance for dismissal or separation. So if you have severance clauses or severance payments to an employee, that would be coverable or under this. Payment of group health care benefits, including premiums. And this would also, I believe, and a lot of other people believe, would also cover HSA funding payments as well. So there's nothing, we haven't really seen this in writing, but that's the CPAs that I've talked to all believe that those HSA payments can be included under the idea of group health care benefits. The payment of any retirement benefits, so that would be the employer side retirement benefits. So that would be 401k matches, safe harbor payments, those kinds of things. And any payment of state or local taxes assessed on the compensation of employees from the employer side. So the big one is the state unemployment taxes for most people, and then in some cases there are local taxes that the employer is responsible for too. So those would also go into this idea of payroll cost. It does not include, as I mentioned earlier, any compensation in excess of $100,000 per employee annualized. It does not include employer-paid payroll taxes. And actually, that should say, that's a typo. I was trying to make this clear, and I actually made it less clear. That should say employee-paid payroll taxes. So it does not include employee-paid payroll taxes. It does not include any compensation of an employee whose principal place of residence is outside the U.S., or anybody that has qualified and been paid under the as a credit under the FFCRA. So there's this idea of double dipping, but remember the FFCRA only covers 10 days. So the PPP loan can cover the other 4 days, for example, if they're taking 2 weeks off, or if they take 3 weeks off because they're really sick, it can cover the 11 days of extra time or whatever. So just a quick example calculation. So let's say XYZ Technical Services had $600,000 in payroll costs last year between January 1st and December 31st. We would divide that by 12, and that gives our average payroll cost, average monthly payroll cost of $50,000. We multiply that times 2.5 times, and we get $125,000. So in that situation, XYZ Technical Services is eligible to apply for a $125,000 loan under the PPP program. Now the big thing is the forgiveness, and that's what I think we're all most interested in. So a portion up to the entire loan amount will be forgiven if the funds are spent on specific purposes in the 8 weeks following the date of the loan. So this kicks in on the loan origination date. So when you sign and that loan begins, that's the 8 weeks following that are when all of these expenses can be claimed for forgiveness. And no more than 25% of the forgiven amount can be for non-payroll expenses. So we'll talk about some of the other things besides payroll taxes here in a second that can be used as a basis for the forgiveness, but it cannot exceed 25% of the total loan. The forgiven amount is completely tax-free, so you will have no tax burden on this amount. You get it tax-free. The borrower must submit an application to the lender that includes documentation of the expenditures. So what I would expect us to see is over the next 8 weeks, all of this stuff becomes more solidified. Any of the things that we're kind of guessing about becomes, they'll issue written guidance on all these things, and then they'll create some sort of an application that you're going to submit to your lender that you're going to ask for forgiveness of a certain amount of this PPP loan, up to the entire amount, if you have the expenses to put against it. The amount of forgiveness is reduced, and this is really important. It's reduced if the workforce is reduced during the 8-week period from where it was either, and you can choose one of these two periods, either to February 15th, 2019 through 6/30/2019, so your average head count, or 1/1/2020 through 2/29/2020. So the reason you would pick one or the other is, let's say last year you had a few more employees than you did this year. You obviously you already have lower headcount, so they don't want you to have they don't want you to be nicked for that. So they're giving you the option of either using last year's number or the beginning of this year's number for the headcount count. So one of the big things that came up yesterday in this webinar was, what if I furloughed somebody? So that's probably the most complicated situation here, is if you've already furloughed employees, you're really going to have to pay attention to this, because you could be jeopardizing the amount of forgiveness that you get. And also, you cannot reduce employee salaries who earn less than $100,000 a year by more than 25%. So you can't cut someone's pay by more than 25% if they're earning less than $100,000 annually during this period of time. That will reduce your amount of forgiveness. By the way, they have not given any details on how much they're going to reduce it or anything else. So that guidance is not out there. They've just warned you that they will reduce it. And they do give you, by the way, a period of time to bring back a furloughed employee. So there is a window there of opportunity to bring back your furloughed employees. So the forgivable expenses, again, are all those payroll costs that we already talked about, mortgage interest, not the principal, but the interest on any debt incurred before February 15th, 2020. So if you've got interest on a line of credit or some kind of a long-term loan, something like that, any of that interest can be applied. Rent based on a lease in place as of February 15th, 2020. So you can't suddenly triple your rent and claim all of that. It has to have already been in place. And then utility payments, including electricity, gas, and the last two are up in the air. Everybody pretty much believes that telephone and internet will also be included, but we're still waiting on written guidance from the SBA on that. But the service must have began before February 15, 2020. So there again, that's something to consider. One of the questions that came up yesterday was about hotspots and those sorts of things for your teleworkers. My opinion, and again, this is speculation, I think all of that will count as long as the service began before February 15, 2020, which may or may not be the case in your particular situation.
Hey, Dave, we've got another question. So somebody has a bit of confusion. So they had the cash flow to pay employees for the period up until February 29th. But they're curious now, does that mean that they can still borrow and qualify for forgiveness?
Yes. There are there is no measurement of your current situation. So if you're doing phenomenally well right now financially, or you're really struggling financially, they're not looking at that. But you do have to attest to the fact that you're concerned about your business because of the COVID-19 situation. But they're not looking at what your financial position is or is not in order to give you this loan.
Okay,
so
perfect.
So that.
Yeah, no, he already wrote back. Thanks. One other one is the furloughed employee window. What's the time window, and then maybe a distinction between furloughed versus laid off?
Well, that's all the same. Furloughed, laid off, fired. If they're not on your payroll, that means they're not in there. Now, again, we're only going by head count, so they're not looking at particular named employees. They're only looking at head count. So let's say you fire someone for due cause, right? So you fire them because they're not doing a good job. You have to essentially bring back someone to replace them. The deadline, I believe, is June 30th, 2020. So you have to bring them back before June 30th, 2020. And my read on the situation, and again, I'm speculating a bit, but I think what they're saying here is if you don't have this headcount remain steady, or at least bring back the headcount by June 30th, there will be some sort of repercussions in terms of penalties. So instead of just decreasing it dollar for dollar, I think they're going to penalize you for not maintaining your headcount. I think that's what they're implying by this. So, if you've already furloughed, laid off, fired, whatever, I mean, I guess fired is a little bit more difficult to bring somebody back, but if you've already furloughed or laid off someone or someone's, my recommendation is I would wait a few weeks and just hopefully we'll get some better SBA guidance on all this. But I think you're going to have to bring them back. It's just a matter of timing as to when you should bring them back and what financially makes the most sense for you. Because if you can claim them as credit and you're going to get paid, even if they sit at home and work on documentation, even if you don't have really client-facing work for them to do, I think it's going to make financial sense for you to do that. But again, every situation could be a little different there.
Okay, well, we'll let you get through the next couple slides here, and then we'll handle a few more questions that have been coming in.
Yep. Yeah, and some of these get really complicated, so I'm trying not to be too long-winded. But so documentation. So these are the things that we think that you're going to need, that I think you're going to need, CPAs that I've spoken to think you're going to need. Again, there's no formal SBA guidance, and lenders are all over the place. Like I've had a number of my clients send me what their banks are requesting, and it's all over the place as to what they need or what they're asking for. So this may not be 100% accurate, but this is kind of my best guess, and this is what I sent to my lender. You're going to need your 2019 IRS quarterly 940, 941s, or your annual 944 payroll reports. Your 12 months of payroll reports beginning from the last payroll date and going backwards 12 months. So the government IRS filings, and then whatever your accounting system or your payroll company can produce for you for the trailing 12 months. Net owner compensation for the same period if the compensation is paid through disbursements. So if you are, say, an LLC, a sole member LLC, that's the way my company is. I'm paid through distributions, and then I pay estimated quarterly taxes. So for me, and for anyone in that situation, I have to be able to document my earnings, my Schedule C net earnings. So that is best done through your 2019 tax filing. If you filed it, if you're like me and haven't filed it, then you need a P&L and a balance statement to kind of show that. And remember that the amount is capped at $100,000 per owner for that annualized. You're going to need your trailing 12-month P&L if you're a sole proprietorship or partnership. So same reason as that last, that you've got to be able to prove your disbursements. State and local taxes assessed on employee comp for each employee. So your reports from your accounting system. 1099s for 2019 for any of those independent contractors that, again, there's those words otherwise that would otherwise be an employee of your business. So you can't include 1099s for people that are, say, doing payroll processing or legal services, or like myself, some of my clients send me 1099s as a consultant. I would not be, you would not be able to claim those 1099s under your calculation. And documentation showing total of all health insurance premiums paid by the company owner or owner under a group. So I sent my latest health insurance bill as my documentation, and then any kind of retirement plan match paid for each employee, including the owners. So any sort of like a 401k report or something along those lines. And one of the biggest potential issues in all of this that affects a lot of people, I'm sure, that are listening right now, this idea of the Schedule C income. So the SBA hasn't provided us with any formal guidance on how those calculations are going to be done. So our best guess is it's that Schedule C income that's shown on your 2019 taxes, or the Schedule K-1 income. But again, up to $100,000. But that all is up in the air, and it could be that lenders interpret this differently and ask for different numbers. So these are my recommendations for what to do kind of immediately. I think that this program is what most of you will see the highest grant amount under the CARES Act. So I think this one is the most important for most of you. I would immediately put together your documentation on those payroll costs that we were just talking about and calculate your average monthly cost. I would immediately fill out the application, and this link is different than the one that we had yesterday. This link takes you to a PDF that was updated this morning. It's no longer an interactive PDF. So the one that was out yesterday, you could fill out and type it right into the PDF. This one is not like that. You have to put it in your PDF viewer and type on top of it, or handwrite it, which I wouldn't recommend. But what you're going to do is you're going to fill that thing out, you're going to print it, then you're going to have to initial and sign it, scan it, and then get it over to your lender in some sort of a secure way. My lender sent me a share file link, and I was able to send all my things through that. And again, it began today for most businesses. So there are a couple caveats where it doesn't begin until the 10th of April, but for most of you that are listening, April 3rd, today is the day. And we are all waiting. Every lender is kind of in a different situation. I just read about one of the large lenders that I don't want to throw their name out on something like this, but one of the large lenders said they're not going to be ready until next week. So if that's the case, I would try using a different lender. But my lender said that they were going to begin sending things at 1 o'clock my time. It's now 2:30. So I guess they've already begun that process. So kind of lenders are all over the place, but today is the day, and it's really important that you move on this. And then number 5, this is a recommendation from a lot of CPAs, and that is potentially create a separate checking account, deposit these dollars into that separate checking account, and then write your expenses directly from that checking account. That way there's no argument that you've commingled dollars or not used those dollars for what you're claiming that you have. The other thing that's really important is make sure you PDF every single expense and really carefully document every single expense that you're spending this on, because I can guarantee you're going to have to send all of that information to your lender, and they are going to go over it with a fine-tooth comb. So do yourself a favor and really keep track of that well as you go. And again, I can't emphasize this enough, that there's no double dipping. So if you use funds under the PPP and you're going to claim those as grant dollars, you cannot also claim FFCRA credits or EIDL grants, which we'll talk about here in a second. You have to use all of these dollars, especially the grant dollars and credits and so forth. They have to be used for only one purpose. So you can't claim them in 2 different programs. The same employee, you can't claim them in 2 different programs. And the other thing that's all over the applications and so forth is this phrase: if the proceeds are used for fraudulent purposes, the U.S. government will pursue criminal charges against you. So while this is a no recourse loan from the perspective of the lender, if you are fluffing these dollars up or fraudulently claiming expenses and so forth, the U.S. government is coming after you. So.
Yeah, I'd say that's pretty important. We will have the link there at point 3 put into the chat of GoToWebinar, so you guys do have it. It is a bit of an unusual link, we recognize, with 2 hyphens between the form and Paycheck, but that is actually the link. So we'll, Eris, can you just drop that in the chat for everybody? And then as we go to step into a few questions here before you jump into the EIDL stuff, we are going to also launch a poll here to just see, do you plan to apply for the PPP, and get some of your guys' feedback for that, have an idea of how many now with that information will be looking to apply for it. So we'll get that launched. So Dave, we've got somebody, they've got a part-time employee who's on W-2, and they were considering cutting their hours by 1 day. They currently do 3 days a week. They were going to cut them by 1 day. Would that work against this person when doing this, or, you know, any suggestions
Yes.
before they go to cut the hours?
Yes. I mean, my recommendation is if you're going to apply for the PPP, I would not cut anyone until you fully understand the implications of that. Now, if you're talking a part-time person in 1 day, it may not make a material difference, especially if you have one of those two periods that we talked about earlier. If you had higher head count then you have a lot less to worry about. So like one of my clients had, I think, 23 employees on average last year, and they have 21 now. So sorry, backwards. They had 21 employees last year, and they have 23 now. So they have some room there that if they were to cut someone, they're still ahead of or higher than their average that they're gonna claim. So you may, depending on your situation, have a little wiggle room there.
Okay, and then somebody was curious if the company's income over the period of the loan counts when it comes to loan forgiveness. So right now they're concerned about the potential of future income, but what happens if the income actually doesn't decrease over the time?
There is no measurement of the financial health of the applicant. So no measure. So if it's up, if it's down, there is no measure. It's a no recourse loan, and they are not taking into account the financial health under this program of the company. That's what they're saying.
Excellent. I think that has answered. Oh, one person just asked for a quick little bit more detail with the PPP and the 100K limit.
Okay, so when we calculate, let me just pop back to this thing. So when we're calculating this payroll cost, so say you had the $600,000 for XYZ technical services. So no single employee that fed into that $600,000 for that annual payroll cost can exceed $100,000. So let's say that one of your employees made $125,000. Only $100,000 of that $125,000 can be in this $600,000 that we're showing as the example, and then we're dividing by 12. So $833.33 per month is the most that you can get credit for any individual employee or owner. It's maxed out at 100K per person. Hopefully that answered your question.
Okay, perfect. Let's move forward into the EIDL.
Okay. So the EIDL program, again, this is a program that has been around for a long time, but they changed, they added nuance and changed it up a bit under the CARES Act. And when I looked on Monday, when I looked at the requirements and the applications for this, I thought, well, this is not something that most should be doing because it was just a lot of work. Well, Tuesday, they launched a streamlined version of this EIDL application program. I did it last night at 10 o'clock at night, and it literally took me 8 minutes to do. So it includes a maximum interest rate of 3.75% and up to 30 years maturity. Up to $2 million is the cap for the loan. There's no personal guarantee up to $200,000. You have to have been in business for at least 1 year. And the allowed use for the funds is sick leave not claimed under FFCRA or PPP for that matter, maintaining payroll, meeting increased cost, making rent or mortgage payments, working capital, which that, as we all understand, working capital means pretty much any expense for the business now then can be used, the EIDL dollars can be used for, or debt restructure. So you could collapse an existing loan or line of credit into an EIDL loan. The interesting thing here is this emergency grant. So they are willing to give you an immediate, and by immediate, they're saying dollars within 3 business days of up to $10,000, even if your EIDL loan and or your PPP loan is denied. So even if for some reason both loans are denied, you would still get this grant of up to $10,000. The only caveat here is that the PPP forgiveness amount is decreased by the amount of the grant. So in other words, if you got, let's say that the government gives you $10,000 under this EIDL program and you qualify for $50,000 of forgiveness under PPP, they will only forgive then $40,000 because they just gave you $10,000. So the net is still $50,000, but we're still into this whole idea of there is no double dipping. You can apply for the loan and grant and apply for the PPP loan. And then my understanding is you can turn down the EIDL loan if you're approved for the PPP. So it may work out, depending on the timing, that you're approved for both. You probably in that situation would want to accept the PPP loan because I would assume the amount would be higher and turn down the EIDL loan. So that's, I think, how that's going to work out. But again, just remember, you can't use those dollars for the same thing. So if you're paying things with the EIDL loan, you can't also claim those under the forgiveness program. So this is where it really kind of gets hairy, that you really have to keep track of where these dollars are being spent, and most especially these PPP dollars, because those are the ones that they're going to look at your bills to ensure that you are spending them on what you say you're spending them. And the application that I was talking about is right there, that if you go to that website, you make your application directly to the SBA for the EIDL loan, and just be sure on the last screen you check that that you're interested in the $10,000 grant. And it's 3 screens long, and I think the only accounting questions they ask you are, what was your trailing 12-month revenue, and what was your trailing 12-month cost of goods, and that was it. The rest of it is really about ownership.
Yeah, and we'll drop this link in the chat here as well, Eris, if you can do that. Couple, I guess, clarifications and questions. So if somebody's already applied and filed for the EIDL and is not heard back yet, should they go ahead and apply for the PPP and go in
Absolutely.
for that? Is there harm in that, or?
No, absolutely. Now, the latest version of the application for the PPP, as of this morning, asks you to add the amount of an EIDL loan that you've already received. So if you already received an EIDL loan, the PPP application actually asks you to disclose that. I think their point is that if you already have an EIDL loan out there, I think they're going to roll those dollars into the PPP program, I believe. But if you've only applied, you haven't actually been granted any loan. So the application doesn't ask anything about that. So again, we're going to have a situation where you've got to use the PPP dollars for those approved expenses and not use the EIDL loan. So you could be in a situation where you're granted both, and maybe you get the EIDL dollars first. You know, you may have to repay that. I mean, I'm not sure how the mechanics of that all is going to work out, but nowhere does it say you cannot apply for PPP if you've applied for the EIDL. I mean, I've applied for both. Most people that I know that I've spoken to, business owners, not just MSPs, but just generally, have applied for both. So I don't think there's any harm in applying for both. You just may not accept. It may be a situation where you don't accept both.
Okay, awesome. And I got a couple more questions here, but I am going to launch another poll quickly to just see if you plan to apply for the EIDL, given the information that Dave's just shared with. One person was asking here, do you have to apply for the EIDL loan to get that up to 10K emergency grant, or do you still qualify for that or may be considered for that emergency grant if you've only applied for the PPP?
No, so the grant, the $10,000 grant, is only under the EIDL program. So, there's some assumptions. If you're a small enough company, it's possible that the PPP loan is less than $10,000. And if that were the case, then I would definitely be applying for both, because you may get the $10,000 under EIDL, and then in that situation, you may forego the PPP loan altogether at that point, because the $10,000 grant was higher. So you'll have an opportunity to not sign the loan in the end. And if that, again, the government has committed to a 3-day turnaround on these grant requests. So theoretically, you should know where you stand with the EIDL prior to the PPP. So.
Okay, no, that sounds good. And then one other question that we had was that, so they applied for the EIDL last week. An older person took them a long time to do it, but there was no mention of this emergency grant. Should they reapply with this newer streamlined application, or would the SBA automatically consider them for the emergency grant already?
I am totally speculating here, but I am guessing that they won't. The reason that $10,000 grant was not in there last week is because that was not passed until a week ago today. That's how quickly all this has changed. So that didn't even exist. There was talk about it, but it did not exist a week ago. So I would reapply. And then if you hear from the SBA, I would just explain to them that you reapplied. I mean, it doesn't say that you can't. I mean, I'm kind of going by on the ideas that unless the government says you can't do something, I'm erring on the side of trying it and then letting them explain to you why it's not right. You can't. You're not breaking any rules if there's no rules written. So.
Okay, awesome. Well, let's keep going on then with the next few slides.
Okay. We just have a couple more. One other option that you have is they've allowed you to delay the payment of your 6.2% employer share of the Social Security tax. So and this is all of the taxes that are due from 4/1 through the end of this year can be deferred and paid 50% on 12/31/2021 and 50% on 12/31/2022. Now, my thought on this is I would think this is something that you would do as a last resort. I would not necessarily take advantage of this unless you were really cash strapped. I would think that would be the only real reason to do this. But it is out there. It is an option. It's essentially a free loan for these dollars. The other thing to keep in mind, and I don't have a listing here because there's just too many of them, but a lot of states have resources available to you in the form of bridge loans or other small business relief programs. I haven't checked into the details of it, but Ohio announced yesterday, I believe, that they were trying to impose a moratorium on commercial rent payments for 90 days. Which is kind of goes in the face of the PPP, because those are one of the expenses that you can claim under PPP for forgiveness. So I wouldn't think that you'd not want to pay your rent, but anyway, there's that. I know a lot of other states have some sort of quick short-term loans or other programs available. So you should check your governor's website to see if there's more information. And if you're in a large city, you might check your city's website too. I've seen some things about LA and Chicago and so forth. So there may be some programs there as well. So just kind of, this is a summary of what I would recommend that you do next. Immediately, if you have not already started talking to your accountant, I would immediately engage your accountant. They are overwhelmed. I can tell you, I was talking to my accountant at 11:30 last night. She was still working, so they are overwhelmed. So you definitely want to reach out and get on their schedule. I would get all that documentation that we talked about together immediately. I would determine who your SBA approved lender in your area is, because that PPP loan, again, goes directly to your SBA lender. Note that there are two kinds of SBA lenders. There's certified and there are preferred. And I believe that you want to try and use a preferred lender if at all possible. One other thing that I've seen in some of the local lenders, they will not, at least two of the local lenders in my area will not accept loan applications for this, except for some from clients. So they have to be existing depository or lending clients already, borrowers, or they won't accept it and they won't process it. So this may or may not be complicated to find an approved lender that will take your loan application. And again, as I mentioned, it can't hurt to go try for this EIDL grant directly from the SBA.
Awesome. Well, with that, we'll step into some Q&A here. One thing is we're putting on a ton of resources out for our partners from SolarWinds here, this obviously being one of them, and we're putting as much content together as possible. Dave has put together a document with a lot of the details around that. It is available on our website in our COVID-19 resource hub. So we'll have the link to our resource hub for COVID-19 resources dropped in the chat panel of the GoToWebinar here. And we'll step into some questions. As I do, we will also launch another poll just to see how beneficial you thought this presentation was today. Dave, there was a question here. Where is it here? Well, I guess the first thing is, and it's something, Dave, that you mentioned already, but a lot of the things and stipulations and stuff around these programs are having tweaks and modifications applied to them. I mean, Dave did the same presentation yesterday and said at the beginning of this one that he already had to change several things before we presented today. So things are constantly being tweaked with these programs. So be mindful of it, that certain things may change over time as it pertains to rules and how some of this is going to be administered. There's somebody was saying that they applied for the EIDL program, they checked the 10K box, but there was no option to request an amount for the loan to borrow.
That's correct.
You know, they determine what qualifies, or?
Yep. Now that one, which is different than the PPP, that one, the SBA themselves are looking at your, they must have some formula based on your revenue and cost of goods, and that's how they're determining what that loan and what that grant is going to look like. So, and of course, they're not publishing those calculations, so we don't know what that's going to look like.
Okay. And then is the maximum request amount on the PPP loan 2.5 times payroll, or does it increase with rent and utilities?
No. So the basis for the request is only based on payroll costs. So the amount is based on payroll costs, but they're giving you that extra 0.5 to cover rent and utilities and so forth. So all of those rent, utilities, interest payments, and so forth, those are part of the forgiveness piece. So that will be used to forgive part of the loan. But the 2.5 times is completely based on payroll and payroll cost as I define them. And I think the reason that they did that is just to keep this really simple. That is, you know, once you get into utility payments and all of that, I think there's just a lot more paperwork and a lot more complication. And again, like I said, they're building the airplane as we're flying, so they have not issued any, even something as simple as saying that telephone and internet is included, and you know, they haven't said for sure that cellular telephone is included. So I think that they're going to work that all out over the next 8 weeks and let us know what those details are.
Awesome. And then just one last one here that popped in, wanting to clarify that they heard right, but why would a preferred lender be recommended over a certified lender?
So my understanding, and this is speaking to some banking insiders that I'm friends with, the preferred lenders have a better connection to the SBA, so their internal processes should be more streamlined than a certified lender. That said, everybody is in a different situation. I know that I have heard again of some big lenders that are preferred lenders that don't have their act together and are not able to process these loans. So the key is, in my mind, is to be as far to the front of the line as possible, because the dollars are going to run out. There's a cap to this. Now, Mnuchin yesterday in his briefing said that once the first round of funding is exhausted, that they are going to go back to the well, go back to Congress and ask for more money. But now we're dealing with Congress, and the only thing that we're guaranteed is this first round at this point. And that first round, I have read multiple articles that said that will be exhausted anywhere from today through a week from today. So by the end of today, they may have already exhausted these funds, this first round of funds. So that's why time is really of the essence, and that's why I think the bigger and more connected the lender is, the more likely you are to be towards the front of that line.
Absolutely, and one of the reasons why we kind of rushed to get this webinar put together here for yesterday and today. So just a reminder for those that did join late or had to skip off to do something else, we have recorded the session. We will get it edited and posted. You can find yesterday's session on the COVID-19 Resource Hub on SolarWindsMSP.com. The link is just in the chat of GoToWebinar, but with that, we do appreciate your time today, Dave. We appreciate the advice and guidance that you've kind of used to simplify all of this for our partners. We thank everybody for their time to join today, and do hope that you found value in this, and best of luck. Do get your applications in, and we look forward to getting some more content to you shortly.
Thanks, everybody.